Question 1. From a historical standpoint, Mr. Delaney, a commercial property owner in Louisville, submits a claim after fire damages his warehouse. During the investigation, the insurer discovers that Mr. Delaney had knowingly inflated the value of his inventory and failed to disclose prior fire code violations. What is the most appropriate action the insurer may take in this scenario? A. Deny the claim entirely due to material misrepresentation. B. Pay the claim partially only for undisputed items. C. Cancel the policy retroactively without paying the claim. D. Increase the deductible as a penalty for misrepresentation. Answer. Correct answer A. Deny the claim entirely due to material misrepresentation. Explanation. Under KRS 304.12.110 and standard contract principles, a material misrepresentation, especially if intentional, allows the insurer to rescind the policy and deny claim. Misrepresenting inventory value and omitting prior violations are considered intentional and material, which void coverage. The insurer, obligated to pay partial claims in such fraud, raising deductibles post-claim or retroactive cancellation are not lawful remedies once loss occurs. Question 2. When evaluating the merits of a builder's risk policy, which of the following would typically not be covered under the standard form during construction? A. Theft of building materials not yet installed. B. Damage caused by faulty design. C. Fire damage to the partially built structure. D. Windstorm damage during framing. Answer. Correct answer B. Damage caused by faulty design. Explanation. Standard builder's risk coverage excludes faulty design, planning, or workmanship. ISO Form CP020. Coverage applies to external perils like fire and wind during construction, and materials are covered if listed and protected. Theft is covered if there's evidence of forced entry. Faulty design is considered a professional risk more appropriate for an EU policy, not prop insurance. Question 3. The validity of a producer's license in Kentucky depends on maintaining good standing. Which of the following would most likely result in immediate license revocation by the Kentucky Department of Insurance? A. Failure to complete continuing education on time. B. Failure to pay fine within 90 days. C. Committing felony related to dishonesty or breach of trust. D. Failing to notify the department of name change. Answer. Correct answer C. Committing a felony related to dishonesty or breach of trust. Explanation. PKRS 304.9440. Committing a felony involving dishonesty or breach of trust is grounds for immediate revocation. The department emphasizes protecting consumers and market integrity. Other actions like late C completion or reporting failures may lead to fines or suspensions, but not automatic revocation unless repeated or egregious. Question 4. Taking into account the core principles of insurance, which of the following best describes why speculative risks are not insurable? A. They can only be underwritten by surplus lines carriers. B. They involve potential for both gain and loss. C. They are regulated differently than pure risks. D. They only apply to personal lines of insurance. Answer. Correct answer B. They involve potential for both gain and loss. Explanation. Speculative risks, e.g. investing in a business, involve both gain and loss, which violates the principle of indemnity. Core requirement for insurable risk. Insurers cover pure risks, e.g. fire, theft, which only involve potential loss. Gains violate the fortuitous event principle and create moral hazard. Regulation or surplus status doesn't is fundamental eligibility barrier. Question 5. During the process of auditing its books, Keystone Corp discovers that a long-time employee has been embezzling funds over the past 2 years. The company holds a commercial crime policy with an employee dishonesty insuring agreement. What is the insurer's most likely response? A. Deny the claim since the dishonesty occurred over multiple years. B. Pay only losses discovered within 30 days of termination. C. Pay the loss as long as discovery is within the policy's discovery period. D. Cover only physical property stolen, not money. Answer. Correct answer C. Pay the loss as long as discovery is within the policy's discovery period. Explanation. Under the ASA CR 021 form, the discovery provision allows claims for dishonest acts discovered during the policy period or within the extended discovery timeframe, usually 6090 days. Coverage applies regardless of when the act occurred if timely discovered, limiting coverage to physical property or third. Post-termination period misrepresents standard form provisions. Question 6. In the context of commercial property insurance, which of the following scenarios best illustrates the concept of insurable interest? A. A bank insuring a building it doesn't own. B. A tenant insuring a neighboring tenant's stock. C. Former employee insuring the company's warehouse. D. Competitor insuring the rival's property for sabotage prevention. Answer. Correct answer. A bank insuring a building it doesn't own. Explanation. Insurable interest exists when a party stands to suffer economic loss from damage to the insured property. A bank with a financial stake, e.g., mortgage holder, has legitimate insurable interest. The other options lack direct financial loss potential. Kentucky law ARS 304.14040 requires insurable interest to be present time of loss, not just policy inception. Question 7. By comparing traditional property policies with equipment breakdown coverage, which of the following scenarios would most likely be covered under a standard equipment breakdown policy? A. Gradual corrosion of pipes in a manufacturing plant. B. Fire damage to a heating unit. C. Sudden rupture of a steam boiler under pressure. D. Vandalism of electrical control panels. Answer. Correct answer. C. Sudden rupture of a steam boiler under pressure. Explanation. Equipment breakdown insurance, formerly boiler and machinery, is designed for sudden and accidental mechanical or electrical failure, such as rupture due to pressure. Gradual wear or fire falls under other coverages, property, or excluded. ISO Form BN 020 covers such accidents to covered equipment. Vandalism is excluded unless endorsed. Question 8. To illustrate this point, a business owner reviews the conditions section of their commercial property policy and sees a requirement to maintain heat during winter. A burst pipe causes water damage while the building was unheated. Weighs the most likely result of the claim. A. The claim will be honored since pipes are a covered peril. B. The claim will be denied due to breach of policy condition. C. The insurer will pay partial damages and reduce settlement. D. The insurer must prove the insured acted intentionally. Answer. Correct answer. B. The claim will be denied due to breach of policy condition. Explanation. Failure to comply with policy conditions, like maintaining heat to prevent freezing, may lead to denial. Per the ASOCP 010 form, such protective safeguards are essential to risk mitigation. Even if the peril, burst pipe, is covered, breaching conditions voids coverage if it materially contributes to the loss. Intent is irrelevant in strict liability for condition breach. Question 9. In light of recent developments, a tech company is sued for using a competitor's slogan in its ads, causing reputational damage. The company has commercial general liability (CGL) policy, under which coverage part is this most likely covered? A. Coverage A. Bodily injury and property damage. B. Coverage B. Personal and advertising injury. C. Coverage C. Medical payments. D. Supplementary payments. Answer. Correct answer. B. Coverage B. Personal and advertising injury. Explanation. Coverage B under the CGL form covers advertising injury including misappropriation of slogans, copyright infringement, and slander. Coverage applies to physical harm, and Coverage C applies only to medical expenses. The ISA G01 form clearly defines these covered offences under Coverage B. Question 10. Throughout the course of evaluating a partial loss to its insured property, a business finds that its commercial property policy includes an 80% coinsurance clause. The building is insured for $400,000, valued at $800,000, and suffers a $100,000 loss. What will the insurer pay? A. $100,000. B. $50,000. C. $62,500. D. $80,000. Answer. Correct answer. C. $62,500. Explanation. Coinsurance formula. Insurance carried, insurance required. X loss equals $400,000, $640,000 Zone $100,000 equals 0.625x equals $62,500. Text insurance carried insurance required times text loss equals $400,000. $140,000 times $100,000 equals 0.625 times 100,000 equals $62,500. Insurance carried insurance required X loss equals $400,000 $640,000 zone $100,000 equals 0.625x equals $62,500. Parazosi 010 and KRS 304.12100. If the insured amount is less than required, insurer penalizes proportionally. The required insurance is 80% of $800,000 equals $640,000. The business only carried $400,000, triggering coinsurance penalty. Question 11. In response to a lawsuit, Regal Foods, a commercial bakery in Lexington, is sued by a former employee alleging wrongful termination based on age discrimination. The business holds a standard commercial general liability (CGL) policy. Which type of coverage would be needed to address this claim? A. Coverage B under the CGL policy. B. Workers' compensation policy. C. Employment practices liability insurance. D. Commercial umbrella policy. Answer. Correct answer. C. Employment practices liability insurance. Explanation. CGL policies specifically exclude employment-related practices like wrongful termination, discrimination, or harassment. These exposures fall under which provides defense and indemnity coverage for such claims. Kentucky insurance practice aligns with ISO EPI forms and NAIC guidance. Workers' compensation applies to occupational injury, and coverage does not restore excluded-based policy coverage. Question 12. Given the circumstances, Westall Logistics owns a fleet of trucks used for interstate transport. One of their drivers causes an accident with a third party while operating a scheduled vehicle listed on their business auto policy under Symbol 7. What does Symbol 7 signify in terms of coverage? A. It provides coverage only for hired autos. B. It extends coverage to non-owned autos. C. It covers only autos specifically described in the policy. D. It includes coverage for all owned and leased autos. Answer. Correct answer. C. It covers only autos specifically described in the policy. Explanation. Symbol 7 in the business auto coverage form limits liability coverage to specifically described autos. Symbol 1 offers the broadest liability protection any auto. Symbol 8 applies to hired autos and Symbol 9 to non-owned autos. Proper use of symbols is crucial for risk control and claim eligibility under ISO 01. Question 13. To determine whether an insurer can increase commercial rates for property insurance in Kentucky, which regulatory body must be informed or grant approval? A. Kentucky Chamber of Commerce. B. The Insurance Committee of the State Legislature. C. Kentucky Department of Insurance. D. National Association of Insurance Commissioners, NAIC. Answer. Correct answer. C. Kentucky Department of Insurance. Explanation. Rate regulation is under the authority of the Kentucky Department of Insurance, PKRS Chapter 304. Insurers must file rate increases and may require prior approval depending on the line of insurance. The NAIC provides model laws and coordination but has no regulatory power. The Chamber of Commerce and Legislature are not regulatory bodies. Context. Question 14. In the absence of an equipment breakdown policy, how would damage from a power surge affecting an insured's manufacturing equipment typically be handled? A. It would be excluded under standard property policies. B. Covered automatically under commercial general liability. C. Paid under business income coverage. D. Covered as fire damage under basic causes of loss. Answer. Correct answer. A. It would be excluded under standard property policies. Explanation. Standard commercial property policies exclude internal mechanical or electrical breakdown like power surges unless caused by a covered peril. E.g. fire. To ensure such losses, clients need equipment breakdown coverage. The CGL policy covers third-party liability, not first-party damage. Business income requires a covered property loss trigger and fire. E. Direct. Question 15. When faced with a non-payment of premium, how must a Kentucky insurer legally proceed to cancel a commercial lines policy? A. Notify the producer only. B. Issue a 10-day written notice to the named insured. C. Cancel immediately without notice. D. Provide a 30-day grace period automatically. Answer. Correct answer B. Issue a 10-day written notice to the named insured. Explanation. Under KRS 304.20040 for non-payment of premium, the insurer must provide at least 10 days written notice before cancellation is effective. Notice must go directly to the named insured, not just the agent. Automatic grace periods or cancellation without notice are non-compliant with Kentucky's fair notice regulations. Question 16. Among the various tools available, which of the following would an underwriter most likely use to assess moral hazard in a commercial insurance application? A. Replacement cost valuation. B. Credit history of the insured. C. Fire protection class of the building. D. Claims made policy triggers. Answer. Correct answer B. Credit history of the insured. Explanation. Moral hazard involves an insured's attitude or behavior toward risk which may lead to fraudulent or careless losses. Credit reports are a common underwriting tool to evaluate this. Fire protection class measures physical hazard, and replacement cost is about valuation, not risk behavior. Policy triggers affect claim timing, not risk acceptability. Question 17. While examining the coverage structure of a policyholder, a retail business seeks protection against catastrophic liability exposures not covered by primary policies. What key function does a commercial umbrella liability policy serve? A. Pays for claims already denied by workers' compensation. B. Replaces property insurance in high-value losses. C. Supplements coverage and increases liability limits above underlying policies. D. Covers cyber liability and exclusions automatically. Answer. Correct answer C. Supplements coverage and increases liability limits above underlying policies. Explanation. Commercial umbrella policies provide excess coverage and may drop down when no underlying insurance exists. Subject to retention, they do not replace primary insurance or automatically cover excluded lines like or cyber. Umbrella policies are governed by policy language and do not override exclusions of underlying policies specifically endorsed. Question 18. Throughout the course of reviewing policies, a medical lab has a claims-made CGL policy that expired in June 2025. In September 2025, a client sues for a June incident. Which condition must be met for coverage to apply? A. The occurrence must have happened during the retroactive period. B. The claim must be reported after the policy period. C. The policy must still be active at the time of lawsuit. D. The claim must be reported within the policy period or extended reporting period. Answer. Correct answer D. The claim must be reported within the policy period or extended reporting period. Explanation. Claims-made policies trigger based on when the claim is reported, not when the incident occurred. ISO forms require timely notice within the policy term or during any extended reporting period if purchased. The retroactive date matters but does not override reporting requirements. If no ERP exists and claim is late, it is not covered. Question 19. Focusing specifically on a small business that experienced a partial fire loss, the adjuster determines the cost to replace the damaged items new is $20,000. The items had depreciated $5,000. If the policy uses actual cash value SCV, how much will the insurer pay before deductible? A. $25,000. B. $15,000. C. $20,000. D. $5,000. Answer. Correct answer B. $15,000. Explanation. Actual cash value SCV equals replacement cost. Depreciation. Here, SCV equals $20,000, $5,000 equals $15,000. SCV equals $20,000. $5,000 equals $15,000. SCV equals $20,000, $5,000 equals $15,000. SCV reflects fair market value, not replacement cost. Replacement cost policies would pay full cost to replace. This valuation method is key under ISO CP forms and common in commercial property coverage unless endorsed otherwise. Question 20. Through careful analysis of a producer's conduct, it is discovered that the agent failed to disclose material exclusion in commercial property policy during presentation. What are the possible consequences for the producer under Kentucky law? A. No consequences if the policyholder signed the application. B. Fines and license suspension for misrepresentation. C. The insurer is automatically liable for full coverage. D. The insurer cannot cancel due to miscommunication. Answer. Correct answer. B. Fines and license suspension for misrepresentation. Explanation. Under KRS 304.12, misrepresentation or failure to disclose material terms is an unfair trade practice. Producers can face administrative penalties, license suspension, or revocation. Signing an application doesn't waive the producer's duty of full disclosure. The insurer may not be liable for uncovered losses if the client wasn't misled directly by them. Question 21. The central argument for allowing insurers to pursue third parties after indemnifying their policyholder centers around which key insurance principle: A. Indemnity, B. Adhesion, C. Aleatory, D. Waiver and estoppel. Answer. Correct answer. A. Indemnity. Explanation. Subrogation allows the insurer to recover payments made to the insured by stepping into their legal rights against third parties. This reinforces the principle of indemnity, which states that the insured should not profit from a loss but be made whole. It's not based on adhesion, contract drafting, or aleatory unequal value exchange, and waiver estoppel concerns legal doctrines, not recovery rights. Question 22. From a practical standpoint, a Kentucky-based financial institution wants protection against embezzlement by its internal finance officer. Which type of bond should it obtain? A. Surety bond. B. Forgery bond. C. Employee dishonesty bond. D. Blanket crime bond. Answer. Correct answer. C. Employee dishonesty bond. Explanation. A fidelity bond, specifically an employee dishonesty bond, is the correct form to protect against internal theft or fraud by a named employee. A blanket bond covers all employees but is broader and typically more costly. Surety bonds guarantee performance, not loss. Forgery bonds apply to fraudulent document use, not theft by employees. Question 23. To better understand coverage under a special causes of loss form, which of the following would typically be excluded from coverage? A. Collapse due to hidden decay. B. Earthquake damage. C. Theft of inventory. D. Accidental discharge from plumber. Answer. Correct answer. B. Earthquake damage. Explanation. The special form CP 1030 offers broad protection covering all causes unless specifically excluded. Earthquake is a standard exclusion and requires a separate endorsement or policy. Theft, plumbing discharge, and hidden decay-induced collapse are included per the form, subject to conditions. Earthquake is categorized under earth movement exclusions. Question 24. The foundation of effective commercial insurance pricing depends on which mathematical principle that enables loss predictability across large groups? A. Loss reserve analysis. B. Risk pooling principle. C. Law of large numbers. D. Actuarial neutrality. Answer. Correct answer. C. Law of large numbers. Explanation. The law of large numbers allows insurers to predict expected losses by analyzing data over large groups of similar risks. It reduces uncertainty and underpins premium rate setting. While risk pooling is related, it doesn't provide the same statistical predictability. Loss reserve and actuarial neutrality are analytical tools, not governing laws of probability. Question 25. With the advent of a new risk management system, a business wants to assign its commercial package policy to a newly formed subsidiary. Which clause governs such assignments? A. Transfer of rights and duties. B. Subrogation waiver clause. C. Notice of loss condition. D. Insuring agreement. Answer. Correct answer. A. Transfer of rights and duties. Explanation. Under the Common Policy Conditions IL 017 of the Commercial Package Policy CPP, the Transfer of Rights and Duties clause restricts assignment without the insurer's written consent except upon death of the named insured. Attempting to transfer coverage without permission can void coverage or create gaps. Subrogation relates to recovery, not ownership transfer. Question 26. Contrary to popular belief, how does the ISO commercial crime form differentiate between theft and robbery? A. Theft requires physical violence. A robbery does not. B. Robbery must include unlawful entry. A theft does not. C. Robbery involves force or threat against a person. A theft may not. D. Theft occurs only when the perpetrator is an employee. Answer. Correct answer. C. Robbery involves force or threat against a person. A theft may not. Explanation. ISO commercial crime forms define theft broadly as any unlawful taking of property. Robbery is more specific. It requires threat or force against persons such as an employee or custodian. Theft includes burglary, larceny, and embezzlement and may occur without personal confrontation or violence. Question 27. One might argue that an accountant who faces a negligence lawsuit for misfiling corporate tax returns would be best protected by which policy? A. Commercial general liability (CGL). B. Commercial property. C. Errors and omissions (EO) insurance. D. Employment practices liability insurance. Answer. Correct answer. C. Errors and omissions (EO) insurance. Explanation. Professional liability errors and omissions protects against negligence in rendering professional services. The CGL excludes such claims under professional services exclusions. EPLI applies to employment disputes in commercial property as for physical asset protection. Professionals in accounting, legal and consulting fields need EO coverage for liability arising from their work. Question 20. Based on the information, a policyholder and insurer disagree over the value of property lost in a fire. The policy includes an appraisal clause. What is the next step under standard ISO conditions? A. Submit the claim to court for binding arbitration. B. Each party selects an appraiser. They agree on an umpire. C. The insurer re-inspects the property and issues its own estimate. D. The Department of Insurance assigns a neutral arbitrator. Answer. Correct answer. B. Each party selects an appraiser. They agree on an umpire. Explanation. Under the appraisal clause in ISO commercial property forms CP010, if the insured and insurer dispute value, each appoints an independent appraiser. Those two appraisers then select an umpire to resolve disagreements. It is not a court process and the DOI does not intervene in private valuation disputes unless fraud is involved. Question 29. In what ways can an ocean marine policy address the interest of multiple parties involved in a shipment of goods? A. By issuing separate policies for each entity in the logistics chain. B. Through the use of general average contributions only. C. By naming all stakeholders under a single hull insurance policy. D. Through coverage for cargo freight and liability under one policy. Answer. Correct answer. D. Through coverage for cargo freight and liability under one policy. Explanation. Ocean marine insurance is modular and can combine hull, vessel, cargo, goods, freight, loss of transport revenue, and liability (PI) under a single master policy. This structure protects owners, shippers, and carriers with insurable interests. General average relates to loss sharing, not direct coverage structure. Naming all entities under a hull pop. This represents cargo interests. Question 30. A 68-year-old man is brought to the emergency department due to acute right-sided weakness and expressive aphasia. CT scan confirms an ischemic stroke in the left middle cerebral artery territory. Which of the following is the most appropriate immediate management if the onset of symptoms was 2 hours ago? A. Start dual antiplatelet therapy. B. Administer intravenous tissue plasminogen activator (EPA). C. Begin high-dose corticosteroids. D. Refer for carotid endarterectomy. Answer. Correct answer. B. Administer intravenous tissue plasminogen activator (EPA). Explanation. If a patient presents with an ischemic stroke within 4.5 hours of symptom onset and has no contraindications, intravenous thrombolysis with TPA is indicated. Early administration improves outcomes significantly.